Hello guys, welcome to the Trading Parrot. I'm gonna do the market morning routine update, starting with looking at the order book. CoinGlass is capturing my attention this morning because it's saying that the price range between 111 and 113. There is plenty of orders placed right above the price, potentially trying to short the price. We'll see if that's still the case. We'll look not just on CoinGlass, but we'll look on other exchanges, other services to see liquidity too. Let's have a look at the news because we just made it to 112. I'm really curious how much buzz this is producing and if it's really attracting retail. Spoiler alert, not really that much this time. We see Bitcoin continues rally to surpass 110 for the first time. That's editor's choice. And in hot stories, what do we see about, well, Bitcoin is signaling a golden cross. What does it mean for Bitcoin? I know that Benjamin Cowen is very focused at the moment on that and a potential rejection, because every time or most of the time we produce a golden cross, we get some correction into the golden cross, and today is the golden cross apparently. So there's tons of news that are positive when it comes to the move of the price, but that we know already that is not necessarily attracting a lot of retail. Let's continue with the rest of the charts. Starting with the aggregated open interest that has put an all-time high already, together with the price. Of course, we got $37.5 billion of aggregated open interest with a single move from 30. That is almost $7 billion in open interest. And I challenge you to find an area like this, and probably that resembles just this area from 25 to 32. $7 billion as well. After that, we started a process of still putting higher highs with bearish divergences on the daily channel down. So let's look if that starts happening here. At the moment, we still have liquidity at 125K. So something tells me that before we do that, we are probably going to take the 125. Let's have a look at what's next. We have the Bitcoin status. I have upgraded the 4-hour from last night into this morning into green. That is because it's very healthy looking, the 4-hour. We're gonna look in just a second. We are holding the trend line that defends the uptrend, which is great. That's why it's in green. I still have in gray the daily, and that is because we are still in the context of a second revenge rally. I'll show you why. Hash Ribbon is about to put a buy signal, so that could be confirmed today. And MACD, the bearish cross, is about to turn and confirm as a bull cross. I think we already have it confirmed, by the way. So let's go into the 4-hour time frame and let's see what we managed to achieve overnight. That resistance of 67 that was pointing down, I say we were at supporting here at 63. Overnight, we managed to close it at 67 and put a new high. That's why the 4-hour is now upgraded. Notice that this is holding the support and getting away from the support, is getting very heated, and now is about to challenge this red line. If we connect these two peaks, that is located at 78, so probably that is around 113, 115. Actually, let's do the calculation very quickly. It doesn't take much longer, so let's do 78 and let's see it in the price. So that is, I was slightly off, that is 114K. Let's remove that. That is just for context, because that is also going to be some sort of resistance that could potentially get pinched next and then come back. As we come back into 72, we should be holding that as support. We can see that we broke the level of the resistance of 67. That is the yellow line. We were held by that for a little bit together with the CPR level, and things are looking very bullish on the 4-hour. On the daily is where I have still my gray area. That's because we lost this level. We came back here, we put a high, and then we lost another level. So second level of defense lost. We found a pivot at 67 on the daily, and we say that we could be going into 77. 77 is precisely where we are right now, and we are being so far held by 77, and I really want to see what we're going to do now that we have confirmed the bull cross on the MACD. We closed yesterday with a bull cross on MACD that is fully confirmed. So I want to see if that new momentum building up on the MACD with the bull cross is going to potentially challenge what the RSI says. RSI on the daily says at 77 we should stop in here and we should come back for another pivot at 73, and from that level we can go and hit the 85. But hey, those are just probabilities. Low likely that 77 gets broken straight away, more likely that we look for a pivot, or even that we come back in here and we break, and from there we do something crazy into 80. Notice as well that we have a global top of the range in here on the daily. In the whole bull market, we have done 1, 2, 3, 4. So if we manage to make a fifth rally, that will be into 85. And at the moment, I'm tracking that in the price. So just so you know, that's located at 120. So if we did a fifth wave with similar magnitude diminishing as we've been doing in this full bull market, we will get into 120. So somewhere in here between where we are to 120 is where I probably want to take some action when it comes to my trades as well. My patrons are well informed about that. I'm still holding spot on BTC, on Ethereum, on Cardano, and on a bunch of other altcoins. So my bags are pretty inflated today. I hope you are enjoying that as well. Weekly is now putting a big green candle. We need to close like this, the weekly, and it's going to look amazing. We'll see if the golden cross is going to be maybe the opportunity to go and to test the bull market support band. That is what we refer as the big gift for the shorts. In that case, we go to 93. And at this time, probably you're already writing down in the comments, are you mental? Are you crazy? We're never going to do that. We'll see. It's not my forecast. It's just at the moment, it's just a wishful thinking, right? Because we still on the weekly can rally into 73. That is around 120. We got a bunch of confluence levels located at those highs of 70, 73 RSI, 120, 125 liquidity. There's a lot of things going on in that 10K range, which I will say 115 to 125, pretty interesting level that we should be focusing. We just crossed the second resistance on the CPR. Again, with the volume 5 coming down, volume has been increasing, but volume 5 is an indicator that is showing that this hill continues to get more pronounced. You can look at the past performance and see, let me hide for a second the CPR, and see the effect of these hills is not always the case that it stops the price, but you know, it's more like a watch out, because decreasing pronounced could start ending the move to the upside. Not fully ended yet, but it could start ending. We get the buy signal from the hash ribbons, which is a great news. It's not confirmed. That is thanks to this increase on the hash rate yesterday. That's not yesterday, that's Sunday 18th. That definitely helped to get this buy, and hopefully it's gonna settle by the end of today. It can still disappear if either price goes too much lower or if the hash rate decreases as well. I don't see why that could happen, but just explaining how it could happen. And long-term holders remain extremely bullish towards this buy. I don't know what they are waiting to get this flat surface, because in the previous year when we broke out, pretty much they stopped buying before the breakout. They already smelled that we were going to have the breakout. They enjoyed the rally without buying anything, and during the rally they started selling. But in here, they're just not done yet. They are still buying, and is long-term holders, large holders, which are also accumulating, and the short-term holders, what's going on? They still don't buy anything and they are in profit. It's showing that their short-term holder realized price is at 94K. So if they took profits, which is what they tend to do, that attracts the price to 94. As you can see multiple times during the cycle, it has happened. Rally, go back to where they are average, back to where they're average, below average, to average, below average. So now we are above the average by quite a lot. So keep that in mind. But definitely institutions are driving this thing. Retail is not buying. Retail doesn't really give a F crap at the moment about Bitcoin. Is pretty much institutions. And my bet is that maybe they're gonna get now poke in the shoulders with this price move and potentially get more interested. Let's see the liquidation levels at 110, 101, nothing really interesting. We are just micro millimeters away from hitting the big price. This is the feast for market makers of the full price range across everywhere. This is the biggest liquidation level that we could be seeing in the next hours, days, maybe during this week, that we consume all the way to 116. It has happened in the past that we pinch the first bid and it's so large, the liquidation. Notice that that is at 113. And if they are defending that and they put more shorts around there, the liquidation can be so substantial that there can be a reaction to the downside. That reaction to the downside is very tricky because you never know if it's going to survive and it's going to come back to take the rest. Sometimes that takes a bit of time, like it doesn't move down to 100, and then you say, okay, what happened with the rest? Oh, we are not going to take it. And then suddenly 2-3 days after you come to that, and it has happened that we don't come back in quite a long time, even 2 to 3 weeks, and then we come back for that. So it's not absolutely fully guaranteed. Don't take as for granted that we are going to take all of it in one go and build all your risk against that thesis, because it might fail. Okay, don't be that dude that bet everything on that, the house, the children, the wife, everything. So the 110 got taken. It was at 143. I look at the 1 minute chart. That's what we're looking in here. And you can see that it was there unless they pull out in seconds. We can go even to the 1 second, but I'm not going to do that. Let's pull it back into the 1 hour and let's see what's going on with those orders. In the meantime, I'm going to show you the orders in the CoinGlass. This is for free, and you can see orders at 111. Pretty much everything is around that area. On the lower end, they are defending the 110. That is the level that could potentially be confirmed as defense. And it's been loads of people looking at Market Monkey terminals, so sometimes it takes a little bit longer to refresh, but once it does, it's very fast. And let's see orders on the heat map. Let's do the aggregated with all these exchanges. And yet 110 got taken. One of the reasons I think it was filled there at 110 with a huge order of 1.2K is because there was no move of that 1.2 higher. When they move it higher, they're just spoofing, and then you see it. Oh, by the way, there is an order now very big of 800. Well, potentially they move it to 120. Part of that. Some got filled and maybe some move into 120. That could be the case. Fair enough. We have order book depth in the negative. That means that we have more sell orders than buy orders. This is more or less where they are located. And we have very little number of longs at this point, just 29, extremely low relative to the past. We have tons of ask in the bid and ask ratio. And if we look at liquidation levels, it's probably overwhelmingly high. Yes, definitely it is. $1.3 million of delta, potentially putting in risk the longs. That is sufficient for when you hit liquidations that are very big to the top and they rag pull for that reaction to be pretty substantial price-wise, okay? So moves of 5 to 10K just very fast, very quickly, thinking that is the beginning of the bear market for people, but that's just liquidation reaction, right? That's just cause and effect, and it's very, very typical. 38 million above the price at 112, 35 million at 113, 33 at 115, and 90 million at 120. So that's definitely now the new 110 sell wall that has moved. Fair value gaps are very extensively all the way, I will say, from this is a move of 24% down. And if we were to take all that liquidity, but really, really, we have oiled the pan massively to fry some very nice eggs in this time and not stick at all. Really, you can just go smoothly, like a, what is it called? Swing in the playground, I think. Swing? Slide. Sorry, slide. I'm confusing it. So yeah, and all of that in the context of the general markets. Look at this, all-time highs with this kind of market. It's crazy, crazy. And I think at some point that decoupling is going to go back to the median. So be ready for that. Either general markets is going to catch up. That is what I'm not betting at the moment. We are against resistance on the Nasdaq, on S&P, same thing. We're against resistance against the RSI. And at the same time, the volatility index is moving up from support, calling for an expansion in here on the market. So what my bet is we get done with all this 125, but watch out with the Nasdaq or something rejecting that thing. If we get that rejection, that drags the market back down to start doing stuff, frying some eggs, call it, I don't know how low. I'm not saying bear market. I'm just saying some reaction from there after all these heated moves. If general markets break the RSI, S&P, Nasdaq, then we can get some more sustained move and potentially a new trading range around that 120, potentially even higher. But for that, we really need the volatility index to break down from here, which is kind of against the odds, just against the odds, not my forecast. That's what the market says. I just read it. Don't blame the messenger. I hope you enjoyed the not so short update of 17 minutes. I need to cut some spaces to make it shorter for you. I'll see you in the next one. Enjoy. Bye-bye.